Hey, good morning. Midweek here. Wednesday, February 13th, 2019. This is a daily Forex trading strategy session brought to you by Forex.Today, hosted at the Forex.Today YouTube channel, sponsored by Traders Way. Let's go. Good morning. Guten Morgen. Hi, my name is Wayne. How are you doing? I'm a currency trader. How about you? Oh, you too. Right on. So I took my kids surfing a couple of weekends ago. I know it's winter, which makes it even better, right? Check this out. I'm in the gift shop, where they sell like sparkly tank tops and stuff like no one should ever wear. They had a section that was 50% off. Like stuff that only, well, I can't say only an idiot would buy because they'd buy all the other stuff. But anyways, nobody wanted to buy this stuff. So check this out. I bought it. It's the economy. Now, if I can do this without spilling my coffee. Can you? No, you can't see it. You can't see it. That's all. You see that? It's the economy. That's all. No big deal. So anyways, I'm like, oh my God, I got to buy this. Like, you don't buy anything in a gift shop. And I'm like, I know, right? So I bought my first gift shop purchase in my life. But they did have Toomey bags, a backpack. I'm like, oh, how much is the Toomey bag? $600. Like, that's a nice backpack. My wife's like, no, you don't need a backpack. But I got the cup. Why can't I buy the bag? So anyways, so nobody wanted to buy this. Oh, yeah. Huh? Nobody wanted to buy it. I love it. I love it. They sell tank tops with sparkly little things on it, or the straw cowboy hat. Like, what are you, Jenny McCarthy 1990? Like, who buys this stuff, right? But anyways. So anyways, they had the stuff for me. So I was happy. Everyone was happy. So I get this. Then my kids are like, oh, so what do I get to buy? Yeah. Anyways. So, hey, nice to meet you. I'm a currency trader. I've been doing this a long time. I'm here to help. I'm here to be your guide. Feel free to ask questions. We'll cover dollar pairs, yen pairs, gold and oil, anything that you want. We can cover fundamentals. We've been doing a lot of trader psychology stuff lately. Maybe I should, kind of keep away from that. I don't know. I get distracted. You ask things and we go places. But anyways, I do want you to succeed. I hope these are hour and a half every day. I hope they start to accumulate over time and become very, very helpful. Because I believe that the key to success here isn't you learning technical analysis better or fundamentals better. I think there's more to it, right? And that's where maybe trader psychology gets in there, but also there's sort of a spirit to it. There's a mindset to it. I don't know. There's just something above and beyond technical and fundamental analysis, like reprogramming your brain, for example. What are you fearful of? Why are you fearful of it? And how can we address that fear? And maybe even harness that energy in a positive way, right? These are much bigger questions. And I try to tackle them with you every single day, as I did for myself a bajillion years ago. So anyways, if these webinars are helpful to you, thank the folks at tradersway.com for making them possible. And you show your loyalty and respect by visiting tradersway.com and opening up a demo account. Spend 30 seconds. And then underneath this video, there's a link so that you can download my MT4 chart templates. So start at Traders Way, open an account, and then download the chart templates, install that into the MT4 account at Traders Way, and your charts will now look like my charts. Isn't that cool? Pound active today, yeah, which it would be, right? It would be every day. Jumbo comes. Okay, so anyways, cool. Get involved, participate, pay it back. You guys want to just jump right into the pig stuff? Okay. Always check, make sure your bigger time frames are legit. Okay. So what did we know, like at the beginning of the week, on Monday and on Friday, we knew that this was a sell zone. Is it possible? Is it possible people were ready to sell that? Is it possible that bears had a trade plan? And that volatility simply just gave them the opportunity? Okay? Ask yourself that. Like, for those without a trade plan, stuff like this is quite exciting. But if you'd already, let me get my drawing tool. Let's say it was Friday of last week and you were in the swing trading group. I don't remember the specifics of what we covered, but it's very likely you could have been a bear on the Great British Pound, right? So we would have discussed that, like, oh, well, this is the sell zone for the week, right? And if you're selling, you have to have your entry before the pivot because you got to come up above and then, right? So your entry has to be here, but then it has to get there to actually put you in. So on and so forth. So anyways, not that you had to have done it or you should have done it, but you definitely could have been a bear on the British Pound. And this is the planned entry. So I think, like, for those with trade plans, you know, you're like, oh, good. Right? For those without trade plans, very, very exciting. Oh my God! Wow! Right? So it really depends on how you manage your portfolio. A lot of people would say, oh, good, I got my entry. Sweet. Nice. Okay. I got some fibs on here. Let's clean that up. This is old. Ah, wrong one. Delete fib. Delete. All right. So what do we have here? Could you possibly be a bear on the Great British Pound? Yeah. The swing is here. Cool. Okay. Nice. Yeah, it's the daily and all that. Yeah, I'll leave the daily analysis for you guys, right? We also have a day trading group, so you can handle that as well. I feel like my importance is more strategic. So let's cover the basics strategically here. If you're a bull, this was your entry. If you're a bear, this was your entry. We knew that on the first day of the month. So what is it today? The 13th of the month? 13 days ago, when we were here, there were two possible trade plans. If you're a bull, you would have bought it here. If you're a bear, you would have sold it here. And everything else is just mediocrity. Right? Like, what are other things? I mean, this would have been a bear entry too. But the bigger swings, right? The bigger swings, like that's definitely a bullish entry. That's definitely a bearish entry. Okay. And so, like, what is it that everybody else is doing? They're making things more complicated than they need to be, right? So imagine you bought this, and now it's failed, right? Yeah. Did you have an opportunity? Yeah, you probably made money on this, right? Sure, your stop was just below this at the very least. You might have moved your stop closer when it did this because that's a lower low. Right? And now if you're a bear, you got your entry too. You're happy as well. You love this move, so you're going to try it again here, right? You sold here. You sold here. You sold here. Or you're selling there right now, but it's all part of the same plan, right? You're just simply a bear. You're a bear. You prefer selling on the way down on rallies. So when this is going up, you can't wait to sell it, okay? And you use basic like pivot points and stuff. And that's, again, if you simplify it down to the basic essence of you're a bull in a bullish market, you're a bear in a bearish market, I mean, that's simple, right? We're not talking about super complicated things. The angle of this and the angle of that and this, this wave of this, and this is a correction of a no. 13 days ago, we knew two prices in which a bear would want to sell. This price and this price. Okay? And on an upward move, this is where a bull would buy, and also the same price that a bear would sell, a bull would buy. That's why it's not that important to me. Its importance has to do with the context. So really, you would have been looking for something like that as a bull, but it cut through that like a hot knife through butter. Cool, that didn't happen, right? But that's how I need you guys to start planning. Not reacting to the market, right? That's why we have a swing trading group. That's why we plan things for the month. If you're a bull, these prices are going to be interesting for you. Set up trade plans. If you're a bear, these other prices are going to be interesting to you. Might take a day, might take a week, might take 2 weeks to get there. But if we get there, these prices are going to be interesting to look for bearish reversal patterns at those prices in the future. So that if you get there, you know what to do. And it's not surprising. Like, oh, but at the new, no. You're like, oh, cool, trade plan, right on. Ciao. Okay? So, for example, this is a different pair now. Okay? This is a bearish price, not when we're here, but after the lower low, if we came back, yes, that's a plausible possible. That's a price in which you can look or should look for reversal patterns, right? And if you do get them, now use technical analysis to sell. Did we get a reversal pattern here as a bear? No. So you didn't sell it. You knew that that was a price to look for. If this was bearish and it did this and did this and then did that, then you would fire for effect. Pa-chow, pa-chow, pa-chow. Right? No, but you didn't get it. So you're like, oh. So if you're still a bear, where's the next price? What would we have known 13 days ago? Oh, yeah, somewhere around here would be another great place to sell. Do you just blindly sell? No. What do you look for? Reversal patterns. That's why you use shorter term technical analysis. Okay? Tactics, tactical analysis. The strategic analysis is that you said, oh, for whatever reason, you're a bear on the pound. Gotcha. Nice strategy. You want to sell the pound. Great. So how do you sell the pound if you're a bear? Strategic bear. Oh, well, sell lower highs and then look around for M3s. And then if you get to those prices, then you confirm or deny the opportunity with technical analysis, like how about double top, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, like somewhere along there, right? Certainly not bullish opportunities. Now, I think the most realistic outcome for this is we just get caught moving sideways. But even then, that's what a bull is thinking, right? You think a bull is thinking something like that? Faux show. Do you think maybe a bull is interested in the fact that this hit a 50% retracement? This high to this low, this is 50%. Seems like somebody cared, right? Coincidence? Yeah, maybe. Okay? But planning, guys, planning. You should almost never be shocked. If anything, you're going to be disappointed that things didn't work out the way you planned. That's different. But there should be very little shock and awe in your trading, right? Okay, so what do you want to be here strategically? Tougher question, right? Because we're close to this resistance, but this is supportive. Well, let's talk about 13 days ago. What was the best opportunity at the time? Can you see how these connect? Cool. What monthly pivot are we at? We're at to the exact price of MM3. So there is a population, excuse me, of traders that have this mindset. So no matter what, you're going to have to fight with them. Thank you, Azabu. Michael says, I made it to another level of understanding. Wow, that's cool, right? I love those aha moments. You can know 3 or 4 alternative futures and plan for them. Yes, manage my risk and perfect on that. Yes, there you go, Michael. That's called a solid trade plan, Michael. You're looking for evidence to confirm or deny which plan is appropriate. You're not trying to figure the market out, like, no, right? If you're looking to the market for answers, you're already late because the people already did it. There's a great interview in the Market Wizards, I think the original one, where I used to have them on CDs. I had the audiobook version of Market Wizards. So it might have been the second round, but it's with Paul Tudor Jones. And Paul Tudor Jones is the type of guy that, you don't hear from him for a couple of weeks, 3, 4, 5 weeks go by, and all of a sudden, snap! He'll drop a massive trade on the market just as it's sleeping, move the market for a couple hours, and get up. And in that interview, though, he talked about, only certain people can do it and only certain circumstances, and you need a lot of money and all that kind of stuff. And that's just what works for him. And he says, well, because everyone if he builds a portfolio slowly, everyone starts copying him because they look for him for answers. And then he says, inevitably, he gets asked the stupidest question over and over and over and over and over and again. Hey, Paul, what are you in now? What are you in? He's like, why would you care what I'm in now? Why wouldn't you care about what I'm doing tomorrow? Because, this is going to be gone tomorrow. By the time I tell you and you figured it out, I'm long and I'm gone. Manny, did you subscribe? I don't think so, Manny. If you're going to yell at me like that, I want to see at least a subscription. Pa-ching. It's only polite. La-di-da-di, we likes to party. So anyways, there's a population of people that have that in mind. I know that. Why? Somebody sold at resistance at an M3. Okay? So I have that. Someone's going to do that. What would a bull do? By the way, we did talk about this 13 days ago, so I just want to make sure you're still on the clue train. Do you think a bull's going to find this attractive for entry? Yeah, probably. So if you're going to trade this on a smaller time frame, selling up here and then taking profit down here is probably a good idea. And there's probably going to be a wave up here and then a drop down here. Just because the velocity was so strong here, it's not likely to happen again. It could. And then look how neat and tidy it is over the last 13 days of analysis. Look how neat and tidy that is. Okay. Could it go bullish now? Well, you're kind of in no man's land up here for bulls. It's plausible. You could, and they bought the right price on a weekly swing, but I think it's sort of probably an exercise of futility. I think bulls, shorter term bulls that don't look at monthly pivot points, for example, may have did the right thing at the wrong time. Right? They bought there, exactly the right thing to do. It's probably going to fail them. Okay, up and down. They're going to probably try again in here. Cool. But but my spider senses are telling me that it's more likely to do this. Okay. But whatever your plan was. Okay. If you were a bull earlier or wanted to be a bull, yeah, you could do this. And there's nothing wrong with it. It's like, it technically makes sense. There's just, the strategy is weak. The strategy is like 50-50. But imagine your life was on the line and you're in war. Okay? And the decision is this. You and your platoon are going to attack, and you think, yeah, there's a 50% chance everyone's going to die. Or you wait for better odds. What would you want to do? Because you're like, 50-50. I got a lot of things to do, you know. I'd like to get married. I'd like to have kids. I'd like to buy a yellow Lamborghini because I made quick and easy money trading with some guy on YouTube. You know, like whatever. You know, you're probably not going to take the shot, right? Hey, Manny, did you subscribe after all that yelling? Come on, Bubba. What's up, Green Man? You did buy it in there. Like I said, it technically makes sense, and you have to have the right bias, right, Jimbo? Like I said, on the short term, there's nothing technically wrong. But what I'm suggesting is strategically it's 50-50. This is like, you know, this is a bear sell zone. So we know there's going to be bears there. And way down here is actually the first bull zone, right? So like, can it take off in the middle here? Yeah, it can, totally. I get it. Makes beautiful technical sense. But I think the odds are just as equal that it does this. That's all I'm saying, right? It's not that you're wrong. It's just like, yeah. So yeah, the weekly target and all that, totally agree with you. But on a monthly basis, It could even be less than 50-50. But, let's say it's 50-50. Now, how about this, right, Jimbo? You want to be a bull, and let's say it did come down this week and hit this M1 and the monthly pivot. And then it does something similar next week, let's say. I don't know. Then it's probably better, is all I'm saying, because now you have a monthly buy zone for bulls. It's not a good one, but it's a valid one. It's a pretty good one, let's say, right? It's pretty good. So if we made one more trip down and you ended up buying this on Friday or something like that, right? Especially if it, let's say, did it today or tomorrow. How do you say in English? Yeah, well, let's just leave it at that. Yeah, if it came down, this is a better buy zone than this. This is just hanging out in nowhere, no man's land, right? So that's all. That's all, right? I'm just like, I guess what I'm trying to cover today, like with that, Jimbo, is more like, how do you analyze risk, or recognize even? How do you recognize risk? When is a valid entry still mediocre? So there's a qualitative analysis here, not quantitative analysis. It's more like qualitative. When should you be confident in your trade, and when should you be less confident and maybe mitigate the risk if it's only 50-50? Before you send yourself out, Jim, send the guy in your platoon you like the least. Send him up first. Right? Like, oh! All right, I think we're going to fall back today, guys. We'll reanalyze tomorrow, right? There's I think it's the Band of Brothers that I have in mind. I'm pretty sure it's the Band of Brothers. Great. It was a follow-up to Saving Private Ryan. So, what's the guy's name? The director. Tom Hanks was the actor. So Tom Hanks got together with the director. What's his name? Really great. Anyways, they decide, it's such a great story. Let's do a different but similar story over the course of like 12 hours. Right? So anyways, about the fourth or fifth DVD in, there, it was, I think, the beginning of Operation Market Garden. Spielberg, thank you. I think it's not the Pacific, the other one. Yeah, I love the Pacific as well. Anyways, I think it was the beginning of Operation Market Garden, where the U.S. paratroopers went in and into Holland to liberate Holland. And it was actually a failed operation. They liberated Holland, and then the Germans took it back. And that's not a good scenario. But anyways, so all these paratroopers go in, and this guy that you'd never seen before was a new character, and he dropped in, and he had some problems, psychological problems, post-traumatic stress disorder, or stress disorders anyways, right? And it gets to the point where, like, he freezes up, he even loses his eyesight, he's just out of his wits, and they keep pushing him, trying to put him back together. Just fire your weapon, get out of the foxhole, get out, all this kind of stuff. And you go about three episodes with this guy, and you start to kind of feel for him. He's really, really, really chronically afraid, and everyone must be afraid, but this is sort of a manifestation of it, right? And then they're going on a little patrol, and they come across a little town, and there's a sniper. So they all really get low in the grass and everything, and the officers are trying to, like, see what's going on. So, like, hey, Blythe was the guy's name. Blythe, go up and see if you can figure out where the sniper is. So, he gets on his belly and he crawls up a little further. Boom, shot in the head, dead. And you're like, what? Wait, I just invested 3 episodes with this guy. You're like, yeah, well, he's dead now. I'm like, all right, well, drag him out of there, back to the base. And it's just like dead, and that's it. That's probably Just, that's it. There it is, reality. Blythe, yeah. Man, and it's just shocking because you're just like, oh, all right, back away. So anyways, Jimbo, cut your lot size in half maybe and send Blythe in and see what happens. Right, because technically it's great. I think strategically it's mediocre. Nothing wrong with it at all. Just mediocre. Okay. Now the cool thing is, what if it kind of does this? I feel like if it works out, I don't think it's going to hit your target, but it might be next week's trade, right? And then, like you said, even if you get up here, you're going to run into serious problems. So anyways, I wouldn't commit too much quite yet, right? Unless you're really a hardcore British pound fan. You're a fanatic. And what else going on? Pound on, I guess euro pound could look interesting, right? So typical price action here, if you're just trading volatility, for example, that's your standard operating procedure. I'd probably even mark this one. So if I was trading just purely the volatility, actually, let me change this up a little bit. Okay. Which is another way of saying scalping. If you're just scalping this is sort of your plan A, this is sort of your plan B, and you're really indifferent. Here's what I'm doing now. Here's your budget constraints. And here's your indifference curve, and there's the tangent. This is the kind of nonsense I'm doing now at school. Oh, I hate microeconomics. Just the study of the individual, the one more unit, or what would your neighbor do? I'm like, I don't give a damn what my neighbor would do. Like, I don't care. But I love the aggregate. I love macroeconomics, right? Just much more interesting questions. Like, what is Europe going to do to fix itself? Like, that is such a big question. Like, can the European Central Bank help? Can the Bank of England help the UK? Well, the UK is not having an economic crisis. The consequence is horrible economically, but it's not an economic crisis. It's a political crisis. Well, what's going on in the European Union? What can the ECB do besides having negative interest rates? Nothing. So why hasn't Europe recovered? They did quantitative easing. They got negative interest rates, and in some fashion, they did even more than the United States. Why are they still at 11% unemployment? Why is there no growth in Europe? It's a political problem. The Spanish government's collapsing. The French government's collapsing. The Italian government's collapsing. Like, oh my God, it's been 10 years. WTF, like, what do we do about this? Like, what do they do about it? What do we do about it? Like, what's going to be done about it? Like, when are we going to get serious about it, right? Like, holy smokes. And I'm not picking on Europeans or British or whatever, right? It's just more like, what do we do? Like, as an economist, what do we do when the fiscal side of the equation, or no, I should say the political side of the equation, is the mess? And in many models, it's not supposed to be the mess, right? So like, if the economy goes through, so here's your potential GDP, we'll label this Y bar. And there's going to be cycles. So we talked about cycles yesterday, right? Annual cycles, business cycles, super cycles. So like, what do you do when the economy is in this kind of thing where you're below potential and falling? Oh, well, the government can come in. This is where your government comes in and says, oh, we'll increase spending, and they create demand, right? And there's your Keynesian theory, right? Which works like a charm. That's what, well, so anyways, that's what's supposed to happen, and it's not happening. And the reason, like, for example, I'm not picking on the British people or the Europeans, or whatnot, is because, like, the U.S. government did nothing either. So, the only thing that worked in the United States was the Fed saved, right? Except for cash for clunkers. But, like, I was there every second of the U.S. financial crisis. Like, Tim Geithner was the worst person you could possibly think of to handle the situation at the time. And it was so bungled and bejungled, and it was so scary how bad it was handled by the U.S. government. It's almost implausible. Like, if I told you the stories now of how it went down, like, this is what the government did, and then this is what the government did, you'd, like, laugh and say, there's no way. There's no way it was that bad. Like, yeah, it was that bad. So, like, I get it, but the U.S. government can, like, bumble its way through and then fix itself, right? But, like, now the European Union, for example, they have to fix themselves and work together. Meanwhile, the United States is building a wall between one of its, imagine now, like, what is France and Spain and Germany? I mean, like, so France is going to build a wall down there to keep the Spaniards out, and they're going to build, well, they already have a wall against the German, right, side and whatever, but, like, building walls. But I don't know what Europe's going to do to get itself right-sided. It's scary, actually, huh? Nick says, how are those governments collapsing? Well, like, so Spain's going to have to, by the way, I'm a Canadian living in America, so I'm a long ways away from an expert. I don't watch British television and stuff and British news, but here's how I understand it. Politically, Spain is going to have to do an early election. So we don't know who's going to be running the Spanish government in a year. So there's that. And then Macron is having a ton of problems now in France, right? And there's a lot of pushback on his policies. So they're in jeopardy. And Italy is in a horrible budget crisis. They're on a brink of collapse as an economy, as a country. And those are three pretty big contributors to European GDP, is all I'm saying, right? If that makes sense, right? So, Nick, I'm trying to be as objective as possible. These are real problems, and it's going to be very, very difficult to fix. But as a global macroeconomist, like, when will Europe get fixed? Because for the world to work, for capitalism to work, everyone has to play well together. Okay? We haven't had a world war in a couple of generations because of capitalism. Yeah. So, but for it to work, you have to work together, right? It's not about me and him or me versus them or building a wall or, it's about tearing walls down. That capitalism, it's not equal, but it's freedom, because you can't have walls if you're going to work together. You need to trade together. You need to make money together, and therefore standards of living go up, right? So, for example, should you be pissed off at Bezos, the owner of Amazon.com, for making $100 billion in 1 year? Is it right to be mad at him if the lowest 10% of society is, let's say, 25% better off than 10 years ago or 20 years ago. Like, capitalism isn't perfect, and one of the flaws, if you want to call it that, of capitalism is it creates inequality. There's going to be less than 1% of the people that live like kings. But, well, that's feudalism did that too. Capitalism and feudalism are very, very different, polar opposites. But if they're polar opposites, very often polar opposites yield very similar results. Some people are going to live like kings. Okay? But if let's say most people are better off, then you're like, well, okay, a couple of people live like kings. It's not everybody. It's not most people. Very, 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 very few live like kings. But, most people are somewhat better off. Right? In America, you can go to a public school. It's probably good enough, that kind of stuff. In America, if you want to change your situation, you can do it. There are things in the way, but it's, who your daddy is doesn't dictate the rest of your life. This, that, and the other thing. But that's what capitalism does. It's going to help most people a little bit, and then a very, very, very small amount of people, like ridiculously. But they did do it's almost like winning a lottery. Like, why don't you just go out and be Jeff Bezos? Well, you're like, oh, well, that's almost impossible. Well, yeah, it's almost impossible to be the richest man in the world. Okay, great. But the United States is such a place where the standard of living has gone up over time. Right? Like, I think it might be better to be let's say the lower 10% of the U.S. economy than the lower 10% of the South African economy? Would that be fair? I don't know. So, I don't know. Anyways, it's just a consequence. So anyways, let's go. Well, oh yeah, okay, well, the problem with Stalin wasn't that he was rich. Come on, dude. That's like saying Jeff Bezos is super rich, so he's killed, 100,000 people. No. And also, Jeff Bezos earned his money. He didn't steal it from a whole bunch of people. Yeah, what about the Indian economy? Well, it is maturing. Minaj, right? It is maturing. I haven't been to India in about 10 years, so I'm overdue to go again. And I met some very wealthy people there. And Americans think they're rich, but then if you want to be super rich, you're probably not American. So I've been in India where they carve little holes into the marble on the floor and put in rubies. Like, do you know anyone in America that has rubies and diamonds and stuff carved into their floors of their home? I don't know anyone in America like that, but it happens in India, right? I've seen driveways that have polished marble for your car. So it's great. You pull up to the gate, and there's two guys. One guy, he's an armed guard, security guard, and he's checking your credentials. And your car pulls into the driveway, right? And you only have enough space for one car. You pull up to the driveway, and there's a huge gate. You can't see through it. It's metal and everything. And two guys sitting in chairs. So the first guy stands up, and he's the guy with the gun. And he checks your credentials, and he's dressed really nice, in a nice uniform and everything. Checks it. Yep, you got the credentials. So then he opens the gate, and you drive through, and guess what? He sits down, the other guy stands up, and he has a bucket and a mop, and he mops the dust from your tires off the marble driveway. Like only in India, right? Now, how about then the lowest 10%, the untouchables of India? Well, I did go to the slums of India for sure. And I was in the local newspaper and I did some work there. That's bad, right? Do we have slums like that in America? No. We have bad neighborhoods and stuff, but there are social services, even if they're horrible. So that's a bigger thing. So when designing an economy, and I think I'm getting way off track here again, but you guys are pushing me. When you're designing an economy, and as we've talked before, you got like one part of the pendulum, let's say, is pure capitalism. This is more like libertarianism. There is no government except for an army that protects my property. And I'll pay a little bit of money for that legal system that protects my army or protects my property. And if anyone tries to take my property, the government's army goes in and shoots them and kills them dead. Great. I'll pay for that. And there's nothing else. The only tax is for the army that protects my stuff. And then on the other stuff, you have pure communism, like, you don't have to work, you don't have to do anything. You can work really hard, we don't give a damn. You can do no work, we don't really give a damn. Everybody gets the same amount of money and all of that. And so somewhere in there, you got to find the right balance for your culture and your society, right? And, Hong Kong is way closer to laissez-faire than the United States, right? The United States has sprinkles of socialism in it, and Canada has more sprinkles of socialism. And then you got like France, and you're like, well, look, it's democratic, it's capitalist. There's a lot more sprinkles of socialism. So, they're just in different spots of the pendulum. And China has really swung from one side to another, and so it's just where you choose. So, like, what does India choose? Well, it chooses, like you could even use microeconomics. Like for the amount of money you have, there's your budget constraint, right? And then you got to find your utility curve for what you can afford. So we'll make that green, right? And you might have one like this, and you might have like one this, and you might have one like this, and then finally, right, this perfect one. And is what you can afford, and that gives you the best bang of the buck. If this is, let's say, capitalism, this is socialism, and somehow it works out where, it works out in the way that it works out. You can't do much more about that, except, India might be a little more like that, where it's capitalist, it's democratic, but there's not a lot of money left over for social services, and not a lot go back to the untouchables, right? And I don't know about healthcare, I don't know about retirement, I'm not Indian, but I don't think there's a lot, right? And China might be the same. So maybe over time, though, what happens is your curve shifts and the economy matures. And there's a difference between a developing economy, an emerging economy, a frontier economy, a first world economy, right? A developed economy. And what's happening is because if you're in a mature economy, so let's say you were in a, I don't know, second world, whatever economy, and whatever that means, and now you're in a first world economy, what happens is your budget curve shifts because what? You tax people, and the government has expenditures, or can spend because they have a budget. And also the economy grows and gets more mature and makes more money. GDP goes up, productivity goes up, all this kind of stuff. And it matures and you have all this money, and your utility curves, right? You shift to a new utility curve, which means you end up having more for social services, even if you stay mostly capitalist, right? And the economy, the society, the economic society improves. Actually, so I took a whole class on basic income, Nick. I studied that with someone from the Fed. She's from the New York Fed. So I did a workshop with her on universal basic income 6 months ago, I guess it was. And then a year before I did on minimum wage. So I've studied things like the effects of minimum wage and all that kind of stuff, the effects of universal basic income and all that kind of stuff. So that's where I get all this kind of knowledge from, Harvard. But anyways, so they're interesting questions. And, you know, what is Europe going to do to address their situations? And, you know, my point is, you know, like, I don't really know. But I hope they drive their currencies into the ground so I can buy some beautiful property in Europe. And if that's the case, that's how usually these things come back. And Jimmy says, yeah, we value rubies and stuff more. Yeah, maybe. Or because the American society votes democratically to have its representatives elected to the government to write laws, things like the level of taxation, that all gets voted for through elections, right? So you vote for a Republican, they take taxes down. You vote for a Democrat, they increase taxes. That's one simple, not overly simple, but simplified version of it. And so society can say, well, we need to tax the rich more so that we can distribute that income so that there's less poor people or less difficulties being poor, right? Like maybe being poor is a little more comfortable because, let's say, if you get sick and you're poor, you can go to the hospital and they'll take care of you. Okay, that's cool. That's what Canada does. But their taxes in Canada are 50%. Cool. Right on. So society can make that judgment. And in that situation, because rich people have less money, they can't afford to put rubies in their marble floors like they do in India. But I don't think people even pay taxes in India. So I've been to India and I've met lots of rich people in India, and we've had casual conversations because a lot of them are in finance about how India works with those situations. And they got great stories like, oh, well, everybody does it this way and everybody does it that way. And I'm like, oh, well, great. So go there. It's probably a good place to be rich. Suresh is from India. Yeah. I miss India. I'm overdue. I don't have time, though. So anyway, so there's your Great British Pound. We got to move over to the dollar because of, well, it's the middle of the month, middle of the week of the middle of the month, so it must be CPI time. Yeah, I think Turkey's always in recession, isn't it? So we can do dollar, or we can just do the typical setup here. All right, I have a guess. I think this is going to help. Oh, I think this is going to help. Hang on. Yeah, I'm due for South India. All right, so the news has come out. Core. Seems so, right? I don't know if I want to do core or not. I think that's interesting. 10-year T-note back to 2.7, which is really good for me. I want it to go that direction. Weekly earnings decrease. Let's see if it radically changes anything. Hey, so I don't know if it helped the video or not. You guys were having trouble with the video. Let's see. So the video is probably not working, but the charts are working. Yeah, well, that's it, right? Undernet Jack brings up a good point. You know, we're missing data because of the shutdown stuff. Yeah, so video is shut. We'll probably change that. Hello! Hey! Where are you? Hey, over here! Hey! Hi! That's funny. Hi! All right, well, I'll have to deal with that later. Woo! Hi! All right, any radical changes here? Dollar strong versus the rand, dollar strong versus the yen, dollar strong versus the pound, dollar strong versus the Aussie, dollar strong versus the euro. And 10-year T-note yields are going up, which is actually cool, right? Yeah, like I said, I don't have a lot of time for that kind of luxury, but I'd say in the next 5 years I'd be in India. But it's funny, it could be sooner than that, depending if it's pleasure or business. But I tend to prefer to travel for business. Cool. Got to be careful up here, right? This is the end. Boom, boom, boom. Check it out, though. Here's how do you feel about my target now? Remember how early I drew that? I drew it when we were still like way up here. Check that out. We hit the target, and it hasn't had one moment in that direction anymore. The first real opportunity is kind of in this area. If it rolls over, right? That's what we need. I'll never look above. Yeah, at least it's not lagging. Yeah. I'll never look into those eyes again. So anyways, pay attention to the rand if you're, oops. Can you picture what will be? So what happened 8 hours ago? The trading day, right? So let's see. Sell, 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 sell. 1, 2, 3, 4, 5, 6, 7 out of 8 times. It's not bad, no? 7 for 8. Don't you remember we were talking about you have to be profitable 33% of the time to break even? So it seems like you can do better than that, right? Desperately in need of some stranger's hand in a desperate land. So this isn't really a good place to buy, except there's a bit of this. Yeah, but you're sort of like that other pair we talked about. I think it was pound Swissy. This is just nomad's land. It's not really a good place to buy, but technically you can, because on a weekly basis, this is the buy zone for bulls. But on a monthly basis, well, I guess you could. You know, I take it back. I guess you could, because this was a buy zone. So for bulls to try here makes a lot of sense. Actually, you know what? I take it back. What is this, USD CAD? Yeah, I could see that now. If you were a bull here, yeah, you're going to do that. Sure. Why wouldn't you? Sure. Cool. Cool. Right? Oh, cool. Cool. So if that's the case, that's oiled down, huh? I don't want that. Let's go back over. Minaj, are you busting out the Sanskrit on us? Oh, you can't move the market. You're not that big, I don't think. Yeah, Greg, what happened to it? Yeah, maybe impacted with things like, Trump's dealings, the wall, Trump's dealings with China. So it's like we get the typical move, and then there's news that comes out that is positive for macroeconomics. So we get a lift from that. But my concern, Greg, is does it come down harder in April because of that? Like, is there going to be pent up yen buying? Yeah. So that's a good question. What happened to it? And usually these things don't just get skipped over, right? So yeah, very good question. All right, so here we are. Did you want to be a bear on oil? If so, your job is really to keep it below this yellow line, and this is the most ideal place to sell. So now on a smaller time frame, you're probably looking for something like this. If that's what you want to do, that's your opportunity. Well, if oil's ticking up, then usually that's a sign of positive macroeconomics. Not necessarily. I mean, it might be a supply issue. So if oil prices are going up artificially because oil producers like OPEC are cutting production, then they're cutting supply and driving up prices. That's not necessarily positive macroeconomics. If it's demand driven, and let's say the Chinese economy is recovering so well that that factories are starting to need more energy, and they're buying more foreign oil, then okay, that would be positive macroeconomics, right? But I mean, that almost points me back to like what we're talking about, like about Europe. What does Europe do to fix itself? Well, the United States did quantitative easing, lowered interest rates very, very, very low, and then removed quantitative easing, raised back interest rates back to neutral. There's still no interest really. There's no real interest rate. We're still at zero on real terms. China runs into a slowdown, mostly because they're trying to mature their market. Not mostly, but partially because they're trying to mature their market and to bring in things like fairness between state-owned and public-owned companies, or not state-owned companies, and stuff like that, and less corruption and all these things. But on the short run, that it can be painful. So then China can come in and then go bang, 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 bang. I guess I got to do it up here. Bang, bang, bang. Do all these things to say, all right, we understand our economy's slowing down, but there's stuff we can do to help mitigate that, to help stabilize the economy. Europe's kind of out of things to do, right? Just like, it's a big question. Like, what are they going to do? Make interest rates more negative? Didn't we cover this like on Monday? The yield on the 10-year German Treasury is 0.1. It's 2.7 here. 2.7. Theirs is 0.1. Like, oh my gosh, right? So what are they going to do, right? Manoj, what a silly question, Manoj. Come on. I expect more from you, Manoj. What strategy is best? Come on. Come on. Blood, sweat, and tears for years, Manoj. So anyways, if you think oil's coming down, There's no reason to believe it's coming down further than this. But eventually it's going to break either to the upside or to the downside. But wouldn't you agree that this is plausibly an area of resistance? Like I wouldn't want to buy it here, right? Does that make sense? It's kind of funny. Hello. Any last questions for today? It's kind of about our time.